Welcome back to the BI Edge, ladies and gentlemen. Nickel is one of the most important metals in the clean energy revolution. But in 2023, Australia's nickel industry was hit hard. Indonesia flooded the global market with cheap supply. As a result, nickel prices crashed. Some of the major Australian producers, such as BHP, scaled back operations as a result of this oversupply in the global marketplace. In this episode, I'll show you how this unfolded, what it means for Australia's balance of trade, and how our new critical minerals alliance with the United States could reshape the future. So what we want to do here is we want to understand the data. Let's start by looking at Australia's nickel market data. Here we can see the balance of trade in the Australian nickel industry over the past 2 decades. So '05 to '06 financial year, over here to 23 to 24. For much of the 2000s and 2010s, Australia maintained a healthy surplus, exporting more nickel than it imported. So we can see down here, we've got a pretty healthy sort of surplus throughout this region here, okay, until we start to fall here throughout this period. And then up again here, and then we really start to fall over the last sort of 5 years or so. Around 22 to 23, as we can sort of see here, we see volatility. That's when the global nickel market was disrupted by Indonesia's production boom. In the chart on the right, you can see global nickel production by country. Indonesia alone produced over 2.2 million in 2024. So this is in metric tons from 2.03 million in 2023. That's more than 10 times Australia's output. Okay, so we look down here, well over 10 times Australia's output, probably closer to 20 times Australia's nickel production output. Indonesia's state-backed policy to dominate nickel refining, especially for electric vehicle batteries, essentially pushed global supply to record levels. Meanwhile, Australia produced just 110,000 metric tons in 2024, as we can see here, down from 149,000 the year before. That is a 26% decline. The oversupply forced BHP and other miners in Western Australia to shut or suspend operations, particularly in the Boulder and Nickel West. So if we go across here, we can sort of see the nickel growth has been affected here with Australia. That's our negative 26%, 26.17% there, from 23 to 24 due to the big production here, volume from Indonesia. So next, some of you are probably thinking, so what? This wasn't just a blip in commodity pricing. It reflects a deeper strategic shift in the global energy economy. Indonesia's dominance didn't happen by chance. They introduced export bans on raw ore, forcing international companies to invest in local refining. That's why you now see major Chinese firms setting up smelters and processing plants in Indonesia. A point I want to make out here is due to Indonesia's flooding of global nickel production, we can look here and see who are the countries from 23 to 24 who benefited, who actually was still in the green. So it was Canada, Indonesia, and China. You can see down here that the United States fared the worst here. So that is an interesting point on this data set. So Australia, on the other hand, exported a large share of its nickel ore without developing as much downstream capability. So when prices fell, we were left vulnerable, and the balance of trade you see here flattened out. Okay, so we can see our balance of trade, we've really flattened out here. Here, this is in billions. So our high point here, we're at 15 or nearly 16 billion. And then down here, 180 million, negative 170 million here in 21 to 22. Another balance of trade deficit again here in the financial year 22 to 23 of negative 510 million, and then back in the sort of again here in 23 to 24. So at its peak, Australia's nickel trade surplus exceeded 10 billion. So if we look at this here, we can see that well exceeded it here and it well exceeded it here. But it fell obviously it started to decline a little bit here in the sort of 2008, and then through the 2010s, it sort of went down a little bit and up and down. And then the price spiked again post-COVID before collapsing when Indonesia's output surged. So we can see again that during COVID was high, still high here. But then once post-COVID, Indonesia surged and it really knocked around Australia's balance of trade in the nickel industry. But even with this volatility, the long-term trend remains upward, driven by renewable energy demand, EV batteries, and stainless steel production. Okay, so next we're going to look at what's next for Australia. The agreement comes in. In 2023, both countries signed a deal to strengthen supply chains for minerals like lithium, nickel, cobalt, and rare earths, resources vital for clean energy technology and defense. The goal is to reduce dependence on Chinese refining and processing by positioning Australia as secure and ethical supplier for critical minerals. Under this framework, Australian producers can access US Defence Production Act funding and investment from American companies, which could help reopen nickel operations and establish local refining capabilities. If executed correctly, this could turn Australia from a simple exporter of raw materials into a value-adding partner in global clean tech manufacturing. That means higher local jobs, better trade resilience, and less exposure to commodity price shocks caused by single market dominance. But it's a race. Indonesia and China are already vertically integrating their supply chains. Australia needs to use data, investment, and innovation to regain competitiveness. Oil, we can see that there is a strong correlation here between nickel and the price of crude oil over the last 60 odd years. Over here, we can sort of forecasting where nickel price as dollars per metric ton by year. We can see here it was at $1,631 per metric ton in 1960. Based on our last data here, it's now at 16,813 in 2024. This is due to the renewable energy transition or the clean energy transition. And up here, it was at its highest here in 2007. Okay. Now, if I want to have a look here at the production rates down here, we can see that, Indonesia's nickel growth here, 8.37% from 23 to 24. In terms of the global marketplace, as I mentioned, they're producing a lot more than other countries here. Australia is sort of ranking in 6th or 7th there at the moment in the global nickel production-based market. We can see here between the total export and import values here, sort of the relationship when these are a bit tighter, it means our balance of trade is a bit tighter. When the blue is further away from the red, it typically means that, we've made more money through exporting more nickel. Okay, so that is a good sort of indicator of health in the Australian export market for nickel. Australia's nickel story is a lesson in global market dynamics. Our policy, production, and data all intersect. The collapse of our nickel industry wasn't inevitable, but it shows what happens when market share meets state strategy. If the US Australia Critical Minerals Alliance delivers on its promise, we might see a renaissance in the nickel sector, this time powered by technology, not just tons. Thanks for watching. If you found this breakdown useful, where I turn raw data into economic insight, subscribe for more episodes in my Scaling the Australian Mining Industry series and leave a comment down below. Thanks, guys, and I'll see you next time.